Welcome back. I'm Christopher Crystal. These are my thoughts and on the market, on Catalyst, so strategic and momentum. This is all my opinion. This is not meant to be investment advice and specific names on how you should invest in your portfolio, but simply me talking about different trends that I see developing in the market. Some of these are very short takes, and some of them would be in longer term discussion for how the market will develop. Thank you. Bye. Welcome back. Thank you for your time. Today we have some fun stuff from yesterday. Of course, we had figures coming in on unemployment in the U.S. Europe continues to move ahead. We have vaccination rates around 120 million in Europe, over 100 million. I think it's around 130, maybe closer to 150 in the United States. And so we're moving ahead on COVID. We're moving ahead on the reopening. We're seeing increased movement in terms of the PMIs. So, and this was clear from a lot of the company reports where they're looking to pass on the cost, and that they've also had very strong order books. And if you look at the EU report on their projection for what's going forward, 2021 looks to be a strong year, and 2022 looks to be a leveling out. We have the comments from Christine Lagarde on the inflation. We have them from the U.S. Fed. We see the Secretary of Treasury. So we have a very strong movement for a continued solid growth. Inflation, everybody's worried about it, but remember, the way inflation is measured is not necessarily the same as the way a consumer measures inflation. And the large banks, the ECB, the U.S. Fed, are very happy with how it's moving along, and they do expect a short-term bump, and they call it something that will be part of the reopening. So if you look at the grand restructuring of things and how we're moving forward in the economy, this is important to note. Now, what's also very good is the economy. The digital economy, as it's called nowadays, is growing to be a word or a phrase that people are getting tired of hearing. But what I think is very important is in the climate of the United States, which is still the largest market, although the Chinese consumer may have more purchasing power, what we're seeing is a scenario where you have less and less real communication. You hear people claiming different levels of facts or different facts to the same story. And it becomes very difficult to have a real conversation. So this has opened up the pathway for digital media, and which has been on the trend for a long time. Remember, digital and mobile phones, they're all using radio waves. Those were what the bidding was for, the radio wave frequencies, the megahertz. And now we have a continued dichotomization where you have different media sources providing voices to different listeners. And so you can get millions of listeners listening to one voice and then millions listening to another voice. And something that's most fun about this is that both of these voices that are broadcasting will start talking about each other. So if you want to hear what your neighbor did, well, then you go to your other neighbor and listen to them. And that's what we're seeing in the media space. But what this opens is a new form of communication, or really it's an old form, and where people are communicating via their preferred outlet. And this is opening up for subscriber growth, and this is the way to look at it. So when you look at how the industry will break down, you see more sources of media coming. And this is very interesting because with COVID and the lockdowns, you had people living in their homes, living in their private little worlds. And much of this lifestyle will continue going forward. So you see things like gambling. You see these subscriber growth numbers for the media sources growing. Amazon is buying out MGM. They'll have the studios, and there's some fun stories in there. Amazon already had their own studios and was already producing their own product, and now they'll have a library, which will allow them for increased growth. You see the same thing going with companies like Heart Media, where they're opening up new sources and providing new voices or old voices to new stations, etc. And what you also see is companies like Substack, which is not yet public, which is in funding rounds and looking to go public. All of these are areas to look at. And one of the most interesting, or that would carry a lot of momentum right now, are the gambling stocks. So again, in the media space, looking at companies like Barstool, which is not yet public, which may be involved with Penn National and the gaming industry very soon. And this comes down to the bookies being eliminated. So this is just like the pot legalization. You take away the illegal element and you make it something that the government can actually tax. And this becomes a fun source of revenue for the government. So the SPACs I would avoid. You have to really dig through those because there's been a lot of fraud. And there's always a lot of fraud in roll-ups. Whenever you're rolling something up and looking at the cash flow and the EBITDA, you really have to dig through the numbers. But this is an area that will benefit in the current market environment and will have continued momentum. Back to the Bitcoin. Bitcoin, I think the greatest lesson it taught everybody was the ability for custody. And this is something that Wall Street has been trying to adapt to and adjust to. And this will mean that with the blockchain technology, you as a share owner could, in the future, actually own and hold your own shares in your own computer, your own account. The ledger would be held by the company. You would hold your shares. And this would virtually eliminate a lot of the custody need that you have with the large banks. Now, if you still wanted to get lending, you'd need the bank. But if you wanted to control your own equity share, you would simply use a blockchain solution where it would be communicating ideally with the government, which would eliminate the need for KYC and AML, and have the ability for the individual shareholder identified to the government, because then the government knows who the taxpayer is, who owns the shares, and whether they've paid their taxes, and whether they're paying their capital gains tax. And as we see governments moving closer and closer to control and to monitoring everything you're doing, this would be a viable solution. Now, of course, the banks on Wall Street wouldn't like this, but with fiat currencies and lending, it's not likely that the large banks would go away. But the digital banks will continue to thrive. And Wall Street has been addressing the issue of the digital idea and using Bitcoin currency in their funds, and they've created these wealth management divisions for the ultra high net worth because they can understand the risk. And risk is very important. Remember, don't risk what you can't lose. And if you do lose it because you risked it, well, who's to blame? So, looking at the gambling, this would be something where all the major sports, Europe, it's very common. Asia, it's extremely common. And in the U.S., you're opening up for the gambling. You have all the major sports that are considered nationals. So like national, you have the NBA, you have Major League Baseball, you have NHL, you have football. All of them have now online betting, and they're all offering out deals where they're either partnering up or even some of their players are getting paid in the digital currencies. Interestingly, on Bitcoin, that's where you see the heaviest exposure from baseball players. And just virtually every conference you have with Bitcoin, you do have former Major League Baseball players speaking. And they've been some of the strongest proponents. Now, Bitcoin, is it an inflation hedge? I don't know. I mean, I'm not going to pay $60,000 or $40,000 or $30,000 or even $700 for a Bitcoin. I'm not going to pay $1. But I think what would be interesting are the NFTs. People who buy and collect cards in the past, and cards were made out of paper, and you could preserve them. Well, you now have this with the NFT. And so with every sports deal that'll come, you'll have an NFT contract. And the key with the NFT is the transaction cost associated with buying and selling the NFT. You may be an owner, but so may other 10,000 people be an owner of the same NFT. But this continued transaction value provides a consumer source for consumer activity. So I would say the NFTs would be a continued space, and the platforms that offer them, they may go down in value. So it's not saying buy the NFTs, always buy the backbone. So looking at the blockchain solutions, these would be the areas that should look at and should continue to gain. And those are my thoughts. Thanks again, and talk to you soon. Be well. Bye. Hi, welcome back. I'm Chris Crystal. These are my opinions, and so it's the my opinions on the thoughts and catalyst within the market. And this is not meant to be investment advice on how you should structure your portfolio or invest your portfolio. These are just merely the identification of the trends, long term and short term momentum within the market. Thank you very much. See you soon, and good luck.